So good morning, good evening, good afternoon, depending on the time that you're accessing this recording. And we are covering Learning Unit 4 today, covering Learning Unit 4. Um, and I'm not going to be covering every single section. I'm just going to be jumping from one to another key point. You should have gone through some recordings that were very meticulous, if I can put it that way, very precise when it comes to many sections. But remember that this is a tutorial, so let me encourage again the class, because it seems like somehow there is a break in communication. If you remember from all the notifications I've sent you, whether it's be on VC Learn or on WhatsApp, the principle should be that you get a test before attending the actual tutorial, which is this collaboration that we're having. So this collaboration is supposed to be where we go much more deeper on some questions that you have. You've tried some questions in the learning unit and you're finding difficult to resolve some of those to answer some of those questions, or there's certain things pertaining to the the notion, the concept that we're going to cover now, that you are struggling with, you're still struggling to understand. But let me again speak to you as an entrepreneur. You are an entrepreneur, and this is a module that is really it's catering for you as an entrepreneur. It is really well written, and if you've been struggling with the readings, that's actually the reason why I'm here, to make you understand that it is quite a well-rounded module, and the textbook is really also quite well-rounded. So that's what we're going to do now. I'm going to make it I'm going to make the session as fun as I can. But again, guys, if you're not doing yourself the favor to read and to just get an idea of the learning unit before coming to class, it might end up being a boring session, although it's not. You see, remember that this is a collaboration session, so it should not be a one-man show, but it tends at times being a one-man session when it should not be. So I should be having much more questions. So let me again say thank you to one of your colleagues. And again, this is not a good thing. Only one colleague has been sending me questions to say, I've gone through the learning unit and I'm not understanding this section or that question. But if you have questions, yeah, we're gonna try our best, because remember that the format is, we don't want to do 2 hours, we don't want to do 3 hours. So if, for example, you are really deeply struggling and your question, you're not quite satisfied with the answer, because I have to make sure that I allocate enough time to each sections or question. So but we can have a one-to-one tutorial, right? Where we could book a session just the two of us, or the three of us, or the four of us, depending on what you're struggling with, and we will go through it, right? So remember again that you as an entrepreneur. So let's begin. So you as an entrepreneur, this is a very important learning unit that you should know, because somehow you're going to have to wrestle with the different sorts of costs within a particular project, within a particular business. So you need to understand how these costs work. And also one of the most vital thing I can bring forth will be the selling price. How do you determine what the selling price should be? This is an economic notion that touches on supply and demand. But you need to make sure that whatever cost or whatever price you're going to determine for your product or service that you are offering, because you as an entrepreneur, you would be led to uh, um, business ventures to innovate in the sense of uh, breathing new project, new businesses. You need to understand the financial side of things, right? With regard to the cost, how we determine cost, this becomes now the one of the most vital thing that you have in the business is that you need to track cost. You need to manage that cost, right? So managerial accounting helps us do exactly that because contrary to financial accounting, which some of you have done or are going to do, the focus is really very much on external as well as internal users. So that's why we need to abide to certain standards when it comes to reporting on financial matters or financial accounting. But managerial accounting very much look at an internal uh, uh, um, process and users. So managers, as you can see, there's nothing mystical about it, but just look at the name. The name tells you everything. Managerial, we're looking at managers, right? So, but why is that? It's because managers need to be able to look at the different costs, right? So, and 4.2 looks exactly at that, the costing of your product. There are costs that are involved, and it really makes sense. Guys, remember again, manufacturing is sort of the toughest, or not, let me not put it that way, but it's like the the most advanced type of business enterprise that you can get out there, right? When you're looking at an economy, some of the most money generating companies are manufacturing companies. You would agree with me, right? So let me be again clear. Manufacturing within an economy, it's very, very important. And that's why within this course, we want to touch on the most important, but the principles that apply to the manufacturing companies will apply everywhere, right? So you will either get a manufacturing or a service delivery kind of company, right? Where you are providing a service. McDonald's provides a service. Toyota is a manufacturing company, right? So we have the production of that manufacturing company. Like I said again, the principles will apply in every type of business, whether it be for profit or not for profit. There will be the same principles that are covered, right? So, but you would get, if we are strictly speaking about a manufacturing or production, we are producing something. There is what those costs. There's a group of costs that relates to the production or manufacturing, right? And there is a group of costs that is non-manufacturing. The group of costs that is not manufacturing is the administration, the selling, and the distribution cost. By the read that you had of this module, you should know that, right? But let's now zoom in on the production or the manufacturing. When you're looking at the production, the manufacturing, there's these three things. I call them the three musketeers, right? The first one is direct labor. Second one is direct material. And anything that is not direct labor, that is not direct material, is the overhead, is the manufacturing overhead, right? So far, by what you've heard, are you good? Are you there? Are you alive? So just let me know there before we move on. Perfect. Thanks, Laika. Guys, the rest of you, are you there? All right. Okay, cool. If I'm going fast, just slow me down a little bit. But you should understand this. I'm sure that if you've gone through the recordings, you know this, right? But then there is the admin, which will be non-manufacturing. You will have the admin. I've given you these sort of breakdown. It's not the best in the world, but it's just when you do going through your revision, you don't need to reread the entire chapter, which would definitely discourage you. But maybe you can have some. This is a way of encouraging you to have also your own notes, right? Put your own notes there so that when it's time for the test, you can just revise quickly, right? So we have the three musketeers. These three musketeers, guys, we're gonna hear about them a lot when we're gonna go to the advanced modules, right? Learning unit 5 to 7, those three learning units, it's all the time gonna be talking about these direct labor, direct material, manufacturing overhead. All right, so learning unit 1 to 4 is foundational because you need to know this by, I can't say, yeah, you need to know it by heart, right? You need to love this. So you know that, okay, if I'm talking about manufacturing cost, I have things that are directly related to the actual product. So when you're looking at the manufacturing of a car, let's say a Tesla, right? So the labor that touches that car to make that car, that is direct labor, right? But you can have maybe cleaning, people who are cleaning in the plant, right? Those people are not actually touching the actual car or the parts, or they are not assembling the actual product. Those people are not directly, their labor is not directly linked to the actual product. So that's why we say that is indirect, but it's still manufacturing. It's still within the plant. So I hope you understand that difference, right? A secretary who is sitting in the admin building, right? That secretary has nothing to do with the actual production, right? Although she's working, you know, she's working for a project, for a specific manufacturing project, but she's not in the manufacturing, right? So her salary, for example, her salary is not manufacturing, is non-manufacturing. Okay. So selling and distribution, whatever you're buying, whatever cost is associated with um, advertising and all this kind of thing, that's not manufacturing. Tesla makes a car, there's advertising that is happening, there is money for distribution, for selling, the marketers will come in, they are marketing this product. These costs are not manufacturing. So that should be clear, right? So um, when you're looking at manufacturing overhead, don't trouble yourself. Just understand that manufacturing overheads, that's your indirect cost. That's basically what it means, right? So anything that is indirect labor, indirect material will be your manufacturing overhead, right? Um, so trust that that's crystal clear there, right? Cool. So just go through this. There is obviously the reason why I like this module is that they touch on each cost. The indirect costs, that is, the rent paid is an indirect cost. It's an overhead. All right. The insurance is an indirect cost. Depreciation of factory equipment. You see, they're quite clear there, right? Factory equipment, factory, the plant, manufacturing, the place where things are being made, right? But if they say depreciation on office equipment, you should know already about that. So this is how much you read your theory and understand it. And that's why there is no other way. You need to be able to read so that you will catch these clues when you are doing your exam or practicing, right? So when you see they're giving you a cost and they're saying, but it's a depreciation on the office equipment, you know that this is not manufacturing, right? And insurance, if they're talking about insurance, it should be an insurance that is factory related, right? So it should be that way. Quality control cost, water and electricity, right? That indirect. Remember again, we are manufacturing this car. The water and electricity has nothing to do. You can't trace the car. You there is nothing about water and electricity that you can see in the final product. That's basically what it means. It's indirect because even if they applied glue, you don't look at a car and say, I can see the glue. No, you can't, right? It doesn't form an integral part of the final product, right? It is indirect. Glue, nails, things like that. You might confuse them as direct material. It's not direct material. It is indirect material. But the doors that they made, the metal, the steel that they're using to build a car, the leather that they're using to build the chairs, that is actually direct material. When you're looking at the car, you can see the leather, so they use leather. You can see the steel, you can see glass, right? Those kind of things. But things like glue, nails, or pop rivet, those things you can't see them, right? Okay, so, or you can't trace them to one product, one unit, right? You can't trace. They're buying, for example, to make a wooden chair, right? They're buying a bunch of nails, right? So, um, those nails will not just end in one chair; they will end in multiple chair. So you can't trace the cost of one nail to that chair. You buy you buy a bunch of a box of nails, right? You buy a bunch of nails and you can't trace that cost to a specific chair, right? But the wood, you need to be able to say, we use this amount of wood to make one chair. Okay, so I trust that that's clear. This is worth taking a bit of time to look at it, so that we are clear about this. But let's move on quickly, right? Because there are sources of information in the costing process. Yes, you as an entrepreneur, how will you find out about these costs? They're just giving you some places where you can find these costs, right? Direct material, the purchase order, the invoices, credit notes, statement received from suppliers, inventory cards. These are places where you're going to find these costs and trace them, right? Direct labor, whether your business is a retail business, whether you are one of our colleagues, is into sales of cell phones, right? Okay, so you need to be able to look at how many phones you ordered, cell phones you ordered, and etc., right? You would have a slip, so you need to be able to trace quickly where are these costs and add them up together, right? Okay, so, but this is quite useful. There is another categorization of these costs. We have manufacturing and non-manufacturing, but we have also product cost. Product cost is basically another way of saying manufacturing. Period cost is another way of saying non-manufacturing. All right? Because these costs, product costs, will be traced to the actual product. The name again, look at the name. The name says it all. It's product cost, right? So direct material, direct labor, manufacturing overhead will most of the time be your product cost. And these costs actually will be sitting on your balance sheet or your statement of financial position, right? So you will look at your asset there. These costs should be figuring there into your current asset. Remember again, we are linking with the rest of the chapters. You as a business, you need to have inventory. You're buying assets, short-term assets that you use for your net working capital. Remember that cycle. You need to acquire merchandise, sell the merchandise, get cash, use that cash to buy other merchandise, to sell them, and etc. Remember that cycle? It's like a wheel, right? But that's when you're looking at your financial position statement, that's your current asset. And you want your current assets to be the engine of your company, right? Your non-current asset, for example, for a manufacturing company will be that big plant, right? The big plant. That's huge, right? You're not going to be settling short-term debts, with your suppliers by selling your your manufacturing plant. You're not going to do that. You're not going to sell your factory to settle short-term debt, right? So you know what we've spoken about in learning unit 3. Fresh in your mind. I'm just linking these two. So when you're looking at the product cost, those will sit on your statement of financial income, but your period, remember again, if you remember very clearly, with this distinction has been hammered on you. Remember that income statement, we generally look at the income statement at the level of a year, a period. It's a period. Remember, I even gave you the example of a motion picture or a video. But the statement of financial position is more like a picture. It's just a picture, right? But the income statement gives you a full view, right? How can I say? A moving view, right? So you can see over a period of time. So then it does make sense that these period costs will be non-manufacturing, right? Like the rents, okay? Example of the rent, for example, for the company. The company rents buildings and all that. That rent will be for a period of time. So therefore, we would look at it as non-manufacturing, right? Because the company is there, needs to rent, whether we are producing or not producing. That rent is for the administration of the company, the headquarters, for example, of the company. So that's a period cost of a period of time. Sometimes we do have marketers marketing for us. We sign deals with them to market our product. These contracts are lengthy over a period, right? So understand the difference. So the cost itself would only be recognized as an expense and move to the income statement once the product has been sold. So we have a particular product, a car. There's cost, direct material cost, direct labor, manufacturing overhead, indirect costs. All those costs would only be recognized as an expense only when we sell the actual product. But they sit somewhere, not virtually, but I want you to picture this. And that's why I've provided you this so that you can see that this is an income statement. Sorry, a statement of financial position. You have your asset, non-current asset, current asset. You see the current asset here. You have an account that we call an inventorial costs account. That's where we put our product cost. And these costs will move to our income statement. Remember our income statement, right? We have our sales and cost of sales. So we will recognize the cost of buying wood, for example, which is a direct material to produce a chair. We would recognize that cost as a cost of sale only when we have done the actual sales. We need to sell the product to recognize the cost of sales. Guys, I need to hear you on this. Does that make sense? It is just a short picture there, but I found that this was important so that already you can keep that in your mind. Does that make sense? Oh, good. Wonderful. 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 So see again, you can see the income statement here. I'm not sure if you are seeing my mouse. My mouse is not quite clear though. I don't know why. But I hope you can see. So you have, yes, you can see it. So you have this side here. I'm just trying my best to show you. This side, you have the statement of financial position. It's an asset. Within the current asset, we will have an account called the inventorial cost. That's where we will put our direct material, direct labor, and indirect cost. We put them there. We recognize them as cost of sales once the sales has happened. Remember, the income statement only comes when the actual sales has happened, not when it has not happened. So this is another good example to show you the difference between the statement and why we're using this statement, by the way. Why are we using income statement? Because income, we're tracing our incomes, our cost as well. All right. So that was two big categories of cost, and you have them here. Now we have also the non-manufacturing. Non-manufacturing, we have divided them into administrative costs, right? And marketing and selling costs, right? Administrative costs, we put them separate, right? Depreciation of office furniture. Office. Look at the name. It says it, office furniture. You can see that this is administrative, right? Salaries of the secretary, executive travel costs, executive compensation. You know that this has to do with the administration of the company. So this is not manufacturing. It is non-manufacturing, right? Perfect. So now we've covered those. All right. So let's look at controllable and uncontrollable costs. You've read this, right? They are costs that you can control. They are costs that you cannot control. And the definition of a cost that you can control is that, you know, a controllable cost, a cost that can be altered by the business decision. So it's generally short term. For example, direct labor. We realize that we are paying too much, right? We can try to reduce, or you see what I'm saying, try to reduce how much we pay out. That's not quite a good thing. Not quite a good example I'm giving. But all I'm saying is, for example, we can try to reduce the work. Okay. That's why, for example, you have automation. We say, all right, we are wasting too much money on certain tasks that we can automate. All right. So that will reduce, for example, the labor cost. All right. But most of the time, trade unions will be very unhappy, right? Some political parties will be very unhappy because it's gonna lead to people being fired. I don't know within your experience as an entrepreneur if you've had to deal with this, right? Where situations where, look, you have to get control of a particular cost. So your direct labor, direct material, reducing, for example, if a supplier charges too much, you can make a decision to say, let's look for another supplier where I can get a more favorable trade agreement so as to reduce the direct material, right? You agree with me? But there will be cost, for example, rental payments. Very difficult to control that cost because, I mean, you need to rent, and somehow, the rent is a specific fixed rate, within a particular area, and it's very difficult for you to control this cost. Insurance payment, actually that cost is imposed on you, right? You can shop around to get a cheaper insurance, but obviously it's not a short-term decision. You can't just make a decision to say, well, I'm moving to another insurer. So you will basically decide over the long term, right? Whether you're gonna you're gonna stop a particular agreement or contract and move to another contract. Remember, contract, they are binding, and they are tough, right? Sunk cost, it's a cost that has already occurred, has already been incurred, right? And it cannot be recovered. That's a sunk cost. You've already made the payment, like a long-term lease. Remember again, the rental agreement. You pay, maybe if you are a business, it's not like a person. If you're a person, maybe you're paying month to month, but for a business, you pay year to year, for example. So at the beginning of the year, you make the payment and that's it, right? So I hope that that's clear. Opportunity cost, you know that you have two competing choices, and whatever you choose, the other choice, the other competing choice becomes an opportunity cost. So when you decide, for example, to buy a particular vehicle for your business instead of leasing, leasing becomes the opportunity cost.